Your mortgage, your credit card debt, and your cost of living are all tied to a geopolitical game of chicken you probably don't know is being played. This isn't some far off prediction for 5 or 10 years from now. We're talking about a financial vulnerability here and now that's being completely ignored by the mainstream news. While the world is looking elsewhere, a quiet battle is brewing over money and power. It's a fight that could put your personal finances directly in the crossfire. There are whispers in financial and diplomatic circles about a so called economic nuclear option, the idea that a foreign power could try to trigger a US debt crisis. The fallout from such an event, however unlikely, would be immediate and brutal. It could cause the interest rates on your mortgage, credit cards, and car loans to explode almost overnight. So, let's talk about what this financial weapon is, why it's even a topic of conversation, and how the shockwave from such a hypothetical attack would travel directly into your bank account. Most importantly, we'll discuss what you can do to prepare for the financial instability it represents. This is the story you aren't being told, and understanding it is the first step to protecting yourself. To understand the danger, you first need to get that the rules of money have changed. For decades, global finance operated on trust. Nations bought each other's debt, and certain assets were considered untouchable. But those days are fading. We've entered an age where finance is being weaponized. Currencies and debt are no longer just tools for commerce, they're becoming instruments of conflict. The trigger for this new reality is the ongoing conflict in Ukraine and the high stakes chess match it has created. There's a growing anxiety in Brussels and other European capitals about the possibility of the US striking a deal with Russia over their heads, a deal that could compromise Europe's security. It's this fear that has led to speculative discussions about how they could fight back, not with tanks, but with a systemic attack on the US dollar. The hypothetical weapon is a debt bomb. So, what is this bomb? It's made of US Treasury securities, the bonds and bills the government sells to fund its operations, and its staggering national debt, which has now blown past $38 trillion as of late 2025. For decades, these treasury bonds have been seen as the safest financial asset on earth. The entire global financial system is built on that trust, and that's the exact vulnerability some analysts are worried about. Combined, the countries of the European Union and the United Kingdom hold roughly $2.34 trillion in US treasury bonds. Nations like Belgium, Luxembourg, France, and Ireland are among the largest holders. This makes the European bloc one of America's single biggest foreign creditors. They are essentially one of our biggest bankers. And now some are contemplating what would happen if they decided to call in their loans all at once. A coordinated sell off of this size would be an act of mutually assured financial destruction. But don't make the mistake of thinking this is pure fantasy. We've already seen the West cross a financial line that makes this threat, however remote, terrifyingly credible. The precedent was set when Western nations froze Russia's central bank assets after the invasion of Ukraine. Around $210 billion in Russian sovereign assets were immobilized in Europe. As of December 2025, EU leaders are debating how to use the interest from these assets to fund Ukraine, a move that would have been unthinkable just a few years ago. This act, while celebrated in the West, showed a new willingness to abandon old rules about sovereign property for political goals. The message was clear: if it can be done to Russia, it can be done to anyone. This has kicked off a global search for financial alternatives and, more importantly, for financial weapons. And some in Europe, having helped write this new rulebook, are now reportedly considering turning that same logic against an ally. It's like a financial gun held to the head of the US economy. And now, let's trace the path of the bullet because it's aimed right at you. This is the part they never connect for you on the nightly news. They talk about geopolitics in abstract terms, but let's connect the dots to your daily life. If a debt bomb of this scale were ever detonated, the consequences wouldn't be contained to Wall Street. It would unleash a financial tsunami across every household in America. Here's the step-by-step chain reaction. First, the US Treasury market itself would fall. Imagine trillions of dollars in bonds getting dumped on the market all at once. The basic law of supply and demand kicks in, the market floods, and the price of those bonds collapses. Here's the critical part to understand. When a bond's price falls, its yield, the interest rate it pays, skyrockets. Today, in December 2025, the key 10-year Treasury yield is around 4.2%. In a panic scenario triggered by a massive sell-off, it's not out of the question that this yield could double. Financial analysts who have modeled this nuclear option warn of a crisis far more severe than 2008. An 8% or 10% treasury yield might seem impossible, but in this kind of black swan event, it's a real possibility. This brings us to the second domino. The US government starts going broke. The government is already running on fumes with a national debt over $38 trillion. To stay afloat, the treasury has to constantly issue new debt to pay off old debt. It's like paying one credit card with another. The problem is, all this new borrowing would have to be done at those new crisis level interest rates. In fiscal year 2025, the US government already spent an astonishing $970 billion just on interest for its existing debt. That's more than the entire defense budget and works out to about $7,300 per household. Projections already showed interest payments crossing the $1 trillion mark in 2026, and that's without a crisis. Imagine those costs doubling overnight. The federal budget would instantly shatter. The government would face an impossible choice: either default on its debt, which would end the dollar as the world's reserve currency, or force the Federal Reserve to print trillions of new dollars just to cover the interest payments, igniting an uncontrollable firestorm of inflation. This is where the third and most important domino falls. The crisis leaves Washington and Wall Street and comes directly for you. The interest rates on almost every kind of loan you have are benchmarked to US Treasury yields. When those yields explode, so does your cost of borrowing. Start with your mortgage. The average 30-year fixed mortgage rate is based on the 10-year Treasury yield. If the 10-year yield jumps to 8%, mortgage rates of 10% or 12% would be the new reality. The housing market as we know it would freeze. Then there's your credit card and auto loan debt. The APR you're struggling with is tied to rates that follow the Treasury's lead. In a crisis, that could easily jump to 30% or 35%. Your minimum payments would swell, squeezing your budget until it breaks. But it gets worse. It's not just your debt, it's the cost of everything. Every business in America borrows money to operate. When their borrowing costs triple, they pass that on to you as higher prices. The cost of groceries, gas, electricity, everything would surge. This isn't the slow burn inflation we're used to. This is a sudden, violent price shock. At the same time, we'd be looking at a potential banking collapse. Banks hold huge amounts of safe assets, mainly US Treasury bonds. If the value of those bonds implodes, the capital of the entire banking system gets wiped out. Banks would stop lending immediately, leading to a massive credit crunch, business failures, and mass layoffs. You might be thinking, but wouldn't this hurt Europe too? You're exactly right. That's why it's called a nuclear option. A US debt crisis would trigger a global depression. The fact that this is even being whispered about in the halls of power shows how desperate some are becoming. It's a contingency plan for a geopolitical worst case scenario. The weapon is on the table, and that fact alone tells you the global financial system is more fragile than at any point in our lifetimes. This is a critical moment, and the situation is changing fast. If you want to stay ahead of the curve and really understand the forces reshaping your financial world, the first step is to be informed. Subscribe to this channel and turn on notifications. And as a thank you for subscribing, you can also take my free class on the macro investor mindset. It is the first module of 10, but you can get access to it today. There's a link in the description. Hearing all this can feel overwhelming, like you're tied to the tracks with a train heading your way. But this information isn't meant to scare you. It's meant to prepare you. You can't stop the storm, but you can build a personal financial arc to survive the flood. The solution isn't to fix the global debt crisis. It's to make your own financial life as resilient and shockproof as possible. It all starts with a new way of looking at money, debt, and risk. The first step is what you're doing right now: paying attention. Most people will be completely blindsided when the next financial crisis hits. By understanding the mechanics of the threat, you're already ahead of 99% of the population. The second step is to fortify your defenses. In a world of volatile interest rates, high interest debt is a weapon aimed at yourself. It's an anchor that will pull you under. You have to get aggressive about paying it off. Think about it. Paying off a credit card with a 25% interest rate is a guaranteed tax-free 25% return on your money. No stock or bond can safely promise you that. Every dollar of high-interest debt you kill is a shackle you remove before the storm arrives. Next, focus on your cash flow. Your ability to earn money is your most powerful tool. In a credit crunch, cash flow is oxygen. Secure your main source of income, make yourself essential at your job, and start thinking about skills or side hustles that will still be in demand during a downturn. Finally, you have to rethink what a safe asset really is. The whole premise of this crisis is that the world's supposedly safest asset, the US Treasury bond, could be weaponized. That should force every investor to ask a scary question. If government debt isn't risk-free, what is? I can't give investment advice, but I can urge you to do your own research. Look at history. What assets have protected people's buying power through currency devaluations and debt crises? Historically, people have turned to tangible things that can't be printed out of thin air by a panicked government. Understanding the historical role of these assets is a critical part of your financial education for the era we are now in. The final step is to develop a resilient mindset. The point of preparing is not to live in fear, but to operate from a position of strength. Financial history shows that times of chaos are also times of opportunity. Fortunes are transferred during crises from the unprepared to the prepared. By building your financial arc now, by cutting debt, securing your income, and understanding risk, you put yourself in a position to not only survive the storm, but potentially thrive in its aftermath. What we're witnessing is more than just another boom and bust cycle. It's a fundamental rewiring of the global financial system. A geopolitical conflict is threatening to spill over into the US debt market, and the ricochet will be felt in every American wallet. The speculative threat of a multi-trillion-dollar debt dump is a symptom of a much larger problem. The end of the era of trust that held the global economy together for 50 years. The old rules are being broken. The very idea of a risk-free asset is evaporating before our eyes. This isn't just about charts and yields. It's about your mortgage payment, your credit card bill, the price of food for your family, the security of your job, and the value of your savings. The mainstream media will tell you not to worry until the crisis is already here. By then, it's too late. You can see the lightning in the distance. The time to prepare is now. Leave a comment below with your single biggest question or concern about this coming crisis. I read them all, and it helps guide our future research. And finally, if you found this information valuable, share this video with at least one other person you care about. In times like these, spreading awareness is one of the most valuable things we can do. Thank you for watching.